Lots of users come to Holistiplan wondering, how do I model Schedule C income for my client? Well, it's really easy. And recently, we've actually made it even easier, and I'll show you how. So, when you are working on a scenario in scenario analysis, and in this case, I'm working with the Peter and Paula Professor demo client household. As I scroll through on my income section here, as I continue to scroll, it's actually going to be underneath Schedule 1 income. You'll see this Schedule C income line item, and then you just want to click on this green pencil icon, and this will actually open up what is almost like a very abbreviated or smaller version of scenario analysis. So here you just click on Add an Entity, Create Blank, and we'll just say that this is Paula's Consulting. There we go. And this is and then you select who is the proprietor. In this case, it's Paula. And then you would select the details respective of this particular, self-employed situation and business for Paula Professor. Now, in this case, we're going to focus on gross sales here. So gross sales, we'll say we're $65,000 or estimated to be $65,000 for the 2024 tax year. And then you want to go ahead and drive the net profit dollar amount. So we can do this in a couple different ways. We could just enter in a value. If you want to say 55,000, they had $10,000 of expenses, gross profit or net profit net profit, not gross profit. Your gross profit 65,000, net profit 55,000. Or you could also utilize what are called field notes. It looks like a little gray post-it note here. And if you click to add or edit notes, you can actually indicate, maybe I put here $10,000 in expenses. Or I can also add a calculation row now. So if I wanted to show gross sales of 65,000 and then add a calculation row and say expenses, spell that correctly. And this will actually calculate it for me, and then I could click Save and Fill Calculation, and then it would take this 55,000 and actually insert it into the data entry box, so I wouldn't even have to do that calculation. So the choice is up to you. I'm going to go ahead and just keep my note here of $10,000 in expenses, save, and we'll see this turns to yellow now instead of gray, and now I have this little note here of $10,000 expenses. So that's how we got to the 55,000. And then once again, you would just earmark input dollar amounts respective of the self-employed situation. So if Paula were running any sort of healthcare premiums through this business, I could certainly enter that dollar value here. You'll notice as I am entering dollar values, it's actually impacting this down here, our qualified business income or QBI. Because the software is, when we're working with someone who has a Schedule C entity only, it will actually automatically calculate what is that QBI income dollar amount to ultimately calculate what the QBI deduction dollar value would be. And so if you're wondering how either of those are calculated, you can always click on these little calculator icons. Actually, anywhere throughout scenario analysis, when you see these little calculators, it will give you the calculation for that particular dollar value. So we are now automatically calculating the QBI deduction for you when you're working with someone who has Schedule C only type income, if they're self-employed. So I could also, though, I've entered in this information at this level, I could close out of here. And then if I were working with someone who also maybe wanted to consider opening up some sort of work retirement account for their Schedule C entity, or they're already making contributions, and maybe we just want to identify like a maximum amount that they can contribute in the year based on our estimates. If you go to your Schedule 1 deductions above the line and expand that, there's this self-employed plans line item right here. And then if you click on this little calculator icon, we can actually see here, I want to take these dollar values out. And then I can also see what are those maximum dollar values that they could contribute to each of these respective work retirement accounts. So this is now also calculated for you in-house or in the software. And then if we wanted to, make a contribution, say we're going to make that max contribution to the SEP, we could say 10,223. And if I close out of here, this will also calculate the deductible portion of my self-employment tax, indicating my self-employed plans. Those are all Schedule 1 deductions or above the line. It'll total that for you here, ultimately impacting your adjusted gross income. And taking note that we did enter in that self-employed plan contribution. So that original QBI amount that we saw before, that actually will be impacted by that contribution. So this now is a little bit different than what we originally saw. So the software is taking into account these different aspects of the Schedule C entity items that you're entering into the software.